accepts lopsided trade deal with U.S. to avoid tariffs. In a bid to prevent a trade conflict between the United States and the European Union, the bloc finalized a deal that prioritizes U.S. protectionist policies, despite widespread criticism of its unbalanced nature. The agreement, announced on Sunday, allows the U.S. to impose tariffs on EU goods while the EU commits to boosting U.S. exports. Yet this arrangement has sparked fierce debate over its fairness and long-term consequences. Critics argue that the deal reflects a deeply unbalanced alliance, with European leaders conceding concessions to a president whose policies have long been seen as economically protective. However, the EU's negotiators insist the pact is the best option to avoid a tit-for-tat trade war that could destabilize global markets, particularly affecting rivals like China and Russia. The deal's terms, however, remain ambiguous, as many details still need to be clarified. In France, where President Macron urged a tougher stance, the agreement drew sharp backlash, with some calling it a capitulation and a sign of European appeasement. European Commission President Ursula von der Leyen, who signed the deal at a golf resort in Scotland, emphasized its significance, though she later admitted the 15% tariffs on automobiles were the closest they could get to eliminating U.S. trade barriers. Germany, which had hoped to eliminate 25% tariffs on cars, now faces a 15% duty, a move that experts argue will increase costs for importers and pressure inflation. The EU's Trade Commissioner, Maroš Šefčovič, warned that the deal avoids escalation, but acknowledges the risks of a trade war, which could harm the German economy. Meanwhile, the U.S. maintains its threat of higher tariffs, including a 30% blanket tax on imports, which would have disrupted months of negotiations. The EU's new agreement, which imposes a 15% duty on most EU imports from the U.S., mirrors a similar deal with Japan, but is higher than the 10% tariff Britain negotiated earlier this year. This raises concerns about the cost of imported goods, as consumers and businesses may bear the brunt of increased prices. In France, where Macron pushed for a more assertive approach, the deal was met with skepticism, with Prime Minister Bayrou calling it a dark day. For an alliance meant to uphold values, the EU's executive body, the European Commission, faced pressure from Germany and Italy to limit damage to their export-dependent industries. But even capitals like Berlin and Brussels were not celebrating. German Chancellor Merz praised the deal as a way to protect the German economy, while European Parliament members criticized it as a lopsided agreement. Italian MEP Brando Benifei called it asymmetric, citing the push for a deal at any cost, which weakened the EU's stance. Despite these criticisms, the deal's terms are still under review, with questions about exemptions and future tariffs lingering. The EU's Trade Commissioner Šefčovič emphasized that the agreement aims to avoid a trade war, but acknowledged that the U.S.'s threats remain a concern. A senior EU official noted that nearly 70% of goods will face a 50% tariff, a significant jump from previous levels. Though details on specific sectors like wine and spirits are still pending, the U.S. has excluded certain industries from the tariff regime, but the EU's decision on wine and spirits remains delayed. Meanwhile, the U.S. has pledged to maintain a 50% steel tariff, while the EU seeks further negotiations on lowering steel duties. Experts stress the need for clarity, as the deal's provisions, such as U.S. commitments to buy more energy and weapons, are largely symbolic. The EU's push to diversify energy sources, including liquefied natural gas from the U.S., underscores its efforts to reduce reliance on Russian imports. While the deal offers temporary relief for European industries, it also highlights the challenges of balancing economic interests with geopolitical tensions, particularly in the context of Ukraine. The EU's leaders, after months of negotiation, reluctantly accepted the deal. citing concerns that Trump might escalate tariffs to a level that would cripple trade between Europe and the U.S. As the agreement moves forward, the debate over its fairness continues, with voices calling for more transparency and accountability in international trade agreements. Trump's $750 billion energy deal. Can the EU deliver? The European Union's $750 billion energy commitment to the U.S. is a promise that may be harder to keep than it seems. The recent trade agreement between Washington and Brussels has sparked a wave of optimism, with the European Union pledging to spend a staggering $750 billion on American energy. However, turning this grand promise into reality will be a formidable challenge. At the heart of this deal is a significant trade-off. The U.S. and EU have agreed on a new tariff structure, setting baseline U.S. tariffs at 15% for most European goods. In exchange, the EU has committed to purchasing $250 billion worth of American oil, natural gas, and nuclear fuels annually for the next 3 years. This commitment, announced by European Commission President Ursula von der Leyen, is a bold move that could reshape the energy landscape. But here's where it gets controversial. Can the EU realistically meet this ambitious target? The global energy market is notoriously complex and subject to fluctuation. While the EU's intentions are clear, the practical implementation could be fraught with obstacles. For instance, how will the EU balance its existing energy agreements with new commitments to American energy? And what happens if energy prices shift dramatically? Moreover, the deal raises questions about the long-term sustainability of such large-scale energy purchases. As the world moves towards renewable energy, will investing in fossil fuels like oil and natural gas prove to be a wise long-term strategy? This is the part most people miss when they focus solely on the economic benefits. And this is the part that could spark differing opinions. Some experts argue that the EU's commitment to American energy might be seen as a short-term political move rather than a long-term energy strategy. Others suggest that it could be a way to strengthen diplomatic ties with the U.S., regardless of the potential environmental implications. What do you think? Is the EU's commitment to American energy a smart move, or is it a risky gamble that could backfire in the long run? Share your thoughts in the comments below.